So next in line, what we have is we have a video message from Mr. Sivasubramanian Ramann, Chairman and Managing Director of SIDBI. So can we have the video on screen, please?
A very good afternoon to all of you. It's great to be here in this wonderfully, captioned topic. The very fact that we're all talking about the digital age and fintechs coming into the space of lending is a very nuanced topic. Let me at the outset put one point across. Fintechs are technology companies and they are not lenders. So when we talk about fintech lending, we're talking about those entities that are authorized to lend, and therefore they use a digital methodology for lending. And when we look at it from this perspective, we find that across the banks and NBFCs, we have practically every entity using a very high level of technology for conducting their lending. And therefore, we then recognize the role of fintechs, which have now come into the DNA of practically every lender. And with the help of the fintechs, we have now brought in algorithms, we have brought in what I call as data-driven solutions to improve the lending. And when we talk about improving lending, we are really talking about the fact that you are sourcing loans from a wider market. You are therefore doing your credit underwriting based on many more data points. And then finally, you are completing the entire process in a fairly digital manner where starting from the application all the way to the documentation, we are without paper. This is, in a very brief way, the understanding that we have got about how lending has converted into a digital mode. And in the heart of this is really the credit underwriting part. And this is where I would like to just take a moment and talk about how the association with various fintechs has led to the exploitation of data that is lying in the various public systems of India. And this has, in a way, got this appellation called DPI, or Digital Public Infrastructure, where we are really looking at bank statements of an entity. We're talking about the GST transaction history of the same entity, and maybe the income tax return that the entity has filed, and most certainly the balance sheet which entities file at the MCA 21 portal. These are really the underwriting data points. And therefore, when we look at the GST transaction history, say for 12 months, match it with the bank statement for, again, the same period of 12 months, and then we overlay it on what is the ITR return. We're talking about a very critical analysis that is being done for the company, which is largely a financial ratio analysis. But given the wealth of information that we have in the GST system, this goes way beyond just financial analysis. And therefore, we're talking about a variety of compliances that firms are sort of exhibiting in their behavior vis-a-vis the GST system. Even something like, when does the GST payment get made by a firm when it has invoiced its customer? That itself can give us an indication of how the firm is behaving and what is the compliance level in that firm. So we really are now talking about the speed of lending. So let me just step back a moment. Now in the MSME space, we're talking about 25 lakh crore as the borrowing amount by MSMEs from various formal sources of finance. We are also talking about estimates that have been made by a host of people, including World Bank, IFC, McKinsey, etc. And we're looking at something in the region of 30 lakh crore rupees coming into the larger system of MSME. So how does the system as it exists today manage to push through 30 lakh crores of credit in, say, the next 3 years? So we are doubling the amount of credit. Now, this is the challenge that we are all facing together. And when we put this challenge alongside the tools that we have now got in our hands, as I had just earlier explained, the digital tools and the digital rails that we have created is what will help us deliver this 30 lakh crore. Now, this is the challenge that all of us together have to be able to meet, and in order to do it in a safe manner, we therefore need a lot of risk mitigation. These data points that I talked about, GST, bank statement, ITR, the balance sheet from the MCA portal, a variety of other filings that are made in the MCA portal, the charges on the assets that the firms have reported, again on the MCA portal, the SIRSAI data of indicating that has a particular bank financed against the asset of a company. Now, all this information really is going towards risk mitigation. And the beauty is that this risk mitigation is happening virtually on a real-time basis. So the net of all that I have said is, if a loan of 1 crore rupees was given to an MSME for buying a particular machinery, and yesterday we were doing this, say, in about 10 days' time, today we are in a position to complete the entire process and disburse the loan in roughly, say, 48 hours. And this has become a reality. Many of us in the system may be doing it even faster. And it is this 5 times increase in productivity that will help us meet the very large credit demand which we are seeing in the MSME ecosystem. What I have really talked about is the fact that the MSMEs which are already formalized in the GST system, they will end up getting better rates of interest, because as lenders we find that we have reduced the amount of risk that we associate with that particular MSME. So if yesterday we were giving a loan at 11%, we would probably end up trying to give that loan at 10%, because that MSME will have got several lenders who are willing to compete and take away the business from that MSME. And this is how we are moving towards a more competitive framework. But from a bank's point of view, we are very clear that given the fact that the risks are lower, we expect that our NPA on the portfolio of the MSMEs will also start coming down. And this has already become a reality. So if we were, yesterday we were looking at, I'm saying, let's leave aside the COVID period. If we were looking at MSME default rates of, say, 4 to 5%, today banks are reporting MSME portfolio defaults at less than 2%. Maybe some banks are less than 3%, but it is not more than that. And this is the reason why we will be able to, as a lending system, perform much better in the MSME ecosystem. Let me also quickly talk about the fact that there is a very large number of MSMEs which are not yet formalized, not on the GST system. And therefore, these are the aspiring households which are doing businesses, which are also doing as a household some agricultural work, which are also probably having one member in the family doing a part-time job in a particular company. Now there are multiple sources of income that they need, and therefore doing a small business becomes very important for them. So we're talking about 20 crore households maybe, where we have multiple businesses and multiple occupations running at the same time amongst the family. And this family typically could be a larger sort of, joint family kind of a concept. how does this family make sure that it is also getting a good interest rate offer from the lending system? And when we look at this particular set of people, their lending system goes way beyond banks and NBFCs. It goes into what is the MFI ecosystem. It goes into what is known as the SHG system, and also goes into chit funds, and finally even the unregulated money lender. So such small entities, let us call them nano entities, they are looking at rates of interest which range from say 24% upwards, maybe all the way up to even 50-60% if they go to a money lender. This is the challenge that is now going to face us, because as we all know, it is this roughly 20 crore households that have the highest aspirational value within them. They want to grow rich, they want to work hard, they are extremely industrious, and they want to improve the quality of their lives. They want their children to get better education, and they want better medical facilities, and they're willing to pay for all of this. So how do we address the concerns of this very large segment? And this is how we again fall back on the digital tools. You'll be amazed that something like 76% of small businesses, even in a village level, get the benefit of a QR code. We have all seen that how the bank statement of such proprietorships and small businesses have grown over a period of time. Earlier, there was practically no bank statement. Today, they have got income flowing into a bank using QR codes, and many of them are making expenditures using UPI. So credit on UPI becomes a very powerful tool for reaching these households. Let me call them the aspiring households. And these households are contributing an increasing share of the gross value added of the country. And therefore, it is really, again, calls upon the entire, lending system to make use of better digital data points to be able to arrive at better risk mitigation for this very large sector. And the one big aspect which is there to help all of us as banks is the credit guarantee system. So in India, there is a very large credit guarantee system that focuses on the micro. And now we are talking about micro, and within that, the nano sector. For the nano sector, let us assume that they are taking loans of approximately 1 lakh rupees, which they repay in 18 months. Now, this 1 lakh rupee loan, instead of being priced at 24 or 25%, could be priced at 18%. And as a bank, we will be able to take that loan and put it under the cover of CGT-MSE, which is the credit guarantee for micro and small enterprises. By doing so, as a bank, we take off 75 to 85% of the risk of that 1 lakh rupees, leaving us as banks holding only 15 to 20% of the risk. And this is really the best way for us to go forward and apply as much of our money to this nano sector, giving them loans of maybe 50,000 or 3 lakhs and covering our loans under the CGT-MSE. The guarantee fee, which now is charged by the CGT-MSE, has come down to 0.35 or 0.37% for these small size loans. This is really one of the best ways, and even from an operational point of view, the CGT-MSE platform has now become a fully API-driven platform. So as lenders, we do not need to have an army of people entering data onto the CGT-MSE platform. It is a simple flow of data from our LMS to the CGT-MSE. So I just thought I'll give you a brief, flavor of how lending has changed and how digital tools are increasingly being used and how fintechs have now become the best partners for banks in this very large effort that we all need to make to ensure that democratization of credit happens in our country. And one last point before I leave is the advent of apps like GST Sahay. So SIDBI has now launched GST Sahay, which is cash flow-based financing. It works on the basis of an invoice that comes from the GST. The account aggregator system is used for pulling the bank account. And based on that, unsecured lending is given to the MSMEs for working capital. As you would all know, most MSMEs, if they get working capital from a bank, it is still a secured lending by the bank. And therefore, we are now looking at increasingly helping the MSME sector, which is a very, a high on intent, high on competence. The behavioral statistics of sector are all in the right, point in the right direction. And therefore, we are quite sure that unsecured cash flow based financing is something which will certainly, spread very quickly across the sector. Thank you very much.